Thursday, January 11th, 2018, Monaco 64, home of alternative economics and contrarian views. I'm going to look at the markets this morning, look at gold again. I made a video on the 20th of December when gold was at 1260. I said, is gold ready for a liftoff? I'm not trying to brag. Sometimes I don't get it right. No one gets it right all the time. And I just want to do an update on the technicals of gold, look at the what the markets in general are doing this morning, and a look at the video I made yesterday about bond yields flashing a warning. It was coincidental because an hour later there's some news about China. It was reported that China was going to slow down or stop buying treasuries. This morning, actually, that's been denied. There's a story here on Zero Hedge. Late yesterday, it says China calls Bloomberg Treasury report fake news. Yields slide, but yields haven't slid. Since I've made that video, it was around 255. Now it's 253, the 10-year yield. It has come off from the highs yesterday after the Chinese report or fake news from Bloomberg. We got just below 260, around 259.80. And we're now 253, which is still above the 250 level. So, what are the markets doing this morning? So it's around 20 to 10 a.m. London. Gold is 1318.50. So we're still consolidating. And it looks like the 1320 area is kind of the midpoint of the consolidation. And 1325 to 1310 is like the borders where the market has been trading around. Silver stuck around 17. We got up to 1720 yesterday. The range has been 1694 to 1706. The Dow is up 14. 25,386, S&P up 3.5 points, and the Nasdaq future up 6.5. In terms of currencies, the pound's weaker. The pound's been weakening of late. It's down another 20 pips, below 135 now at 134.85. The euro not doing much. It's at 119.40. Down about 6 pips, and the dollar's recovered a little bit against the yen. It's up 20 pips at 111.63. So not really much move there. Crude oil remains firm, 63.62 WTI, up a third of a percent. As Ethereum has been leading the way of late, so we're now 1,236. It has come off from the highs at around 1350. Bitcoin down about 8%, 13,600. There's some news about South Korea that they're gonna ban cryptocurrency exchanges. We've seen in the past news about China hurting Bitcoin over a year ago, and every time the news came out and the market came off and it just kept going up. We'll have to wait and see. Yeah, so I'd say, cryptocurrencies at the moment are taking a bit of a break from their, things don't go up in a straight line and things do correct. I look at some of the chats on Telegram about some tokens that I follow, and the people in there, and a lot of them say, "Oh, to the moon, to the moon." People need to remember that things don't go straight to the moon in the markets. They correct. Sometimes they don't go to the moon at all. They go to the bottom of the sea. Anyway, about the gold market. Yeah, as I said, I made a video on the 20th of December, and precious metals did take off since then. In the last few days or last week, it's been consolidating after an almost straight move up from like 1236 to 1320 or so. So I want to have a look at the charts here. So the daily chart of gold, as you can see, still looking pretty good. Yesterday we had a spike to 1328, but it still looks like we're consolidating here. And a consolidation usually results in the resumption of a previous trend, which was up, as you can see from begin, you know, like the 12th of December or so till the to the beginning of the year. And we've been consolidating since the beginning of the year. I guess it's easy to see now. If we break 1325, I think, and are able to close above that, it could be quite a good signal. If I think on the downside, 1305 still the key support for gold. The weekly chart, you can see that the 50-week moving average is getting a little bit of distance now from the 100-week, and we're comfortably above the 200-week moving average, which is the red line. And you want the 50 and the 100 to be above the 200 in a bull market. This is the XAU index. It has, you know, we had like that breakdown in the beginning of December, capitulation selling, I would say. We broke the lows from March and July, but then it just rebounded very quickly, and it kept going up until the beginning of the year. A few days ago, we had like a little breakdown, and yesterday we rebounded again, and I think it's still looking pretty good. It's a bit of a consolidation. Just like the physical metal is doing here, XAU index. It's the Philadelphia Gold and Silver Index. So let's have a look at the HUY. Well, HUY has done, HUY Gold Bugs Index has done the similar thing that XAU has done. And a few days ago, as you can see, we corrected down, and we actually held a key support, which used to be a resistance back in late last year around 190 or 191. It held that, and it's gone back up above that line, and it's gone back above the moving averages as well. So also looking pretty good. And what else is going on? Well, I see a story here that I haven't read yet, but probably quite interesting. It's on Zero Hedge by Brandon Smith of altmarket.com. And it says, "Party while you can. Central banks are ready to pop the everything bubble." And he goes on to say, many people do not realize that America is not only entering a new war, but within the next month we will also be entering a new economic era. In early February, Janet Yellen is set to leave the Federal Reserve and be replaced by the new Fed chair nominee, Jerome Powell. Now, to be clear, the Fed chair, along with the bank governors, do not set central bank policy. Policy for most central banks around the world is dictated in Switzerland by the Bank for International Settlements. I don't disagree with Brandon there. Fed chairmen like Janet Yellen are mere mascots implementing policy initiatives as ordered. This is why we are now seeing supposedly separate central banking institutions around the world acting in unison, first with stimulus, then with fiscal tightening. So I haven't read the article yet, but from what I see, what he's saying here, the title is that central banks are gonna rein in all the credit and all the largesse that they gave to the world, you know, in the last 10 years since the crisis of 2008. Makes sense to me. I don't think the people in charge of the BIS are that stupid to think that they can keep inflating without any consequences, that they need to rein it in. And they'll be prepared for it, of course, because they're in charge. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on steemit.com and on Twitter. And I'll talk to you later.